Welcome to the Real Estate Syndication Show. Whether you are a seasoned investor or building a new real estate business, this is the show for you. Whitney Sewell talks to top experts in the business. Our goal is to help you master real estate syndication. And now your host, Whitney Sewell.
I'm Whitney, host of the Real Estate Syndication Show. Every day, I'm interviewing experts that will help you to successfully invest in or grow your syndication business. Hit the like and subscribe button so you'll be on track to learn from the best in the industry. This is your daily Real Estate Syndication Show. I'm your host, Whitney Sewell. Today, our guest is Peter Halm. Peter, also known as the Deal Hunter, Halm is president of Vineyard Investment Partners, where he is responsible for finding investment opportunities and forging strategic partnerships. Together with his wife and partner, Monique, they bring groups of investors together to purchase commercial property. I mean, their specialty is working with investors, raising capital, but something that happened recently in their business is switching asset classes. The pandemic just changed maybe the way they looked at some specific asset classes that they were in. And Peter goes into that in some detail today. I know that's going to be useful to you, or maybe to think about, depending on what asset classes you have in your portfolio as an operator or an investor. But also we go into some capital raising techniques, tools, things you might want to think about, or best practices, even some mistakes. One specific mistake I feel like he brought out that was just crucial to anyone or anybody in this business that's working with investors should know. It's just so important. Anyway, I know you are going to learn a lot today. Enjoy the show. Peter, welcome to the show. Get us started with a little of your background, maybe a little bit about what you all are focused on right now and your specialty.
Thank you so much, Whitney. Well, I'm here to basically let you know what's going on in my world, and I'm partnered with my wife, Monique, and we are real estate investors based in California. I'm originally from Australia, came here about, last century sometime. So we are basically capital raisers, and we invest mainly in multifamily and industrial. And it's been chugging along pretty well during the whole pandemic thing that we've had. As we pivoted more towards industrial then, because we kind of got the feel that essential industries were what's going to keep on going. And I guess prior to that, we were doing a lot more C-class multifamily, and we saw there were issues with the whole not being able to evict people and delinquencies. So we kind of, in multifamily, we moved more towards B plus class, and as I said, industrial.
Okay, no, that's awesome. And maybe you can elaborate a little bit on just the ways, real estate in your industry have pivoted during COVID in what you all have done. I know you talked about multifamily to industrial. I remember Monique and I talked about that somewhat as well, but I'd love to hear your take on that and maybe how that, what happened during COVID and why you all made that shift.
Okay, yeah. So going back to early 2020, we were in Australia, and we said, we probably better get back to the States because we may not be able to get back here. So we quickly flew back, and we took stock of our current assets, and we saw that we're having issues with our C-class. And we saw, people who we knew were able to pay rent stop paying rent because they didn't have to. So that was an issue, and we thought, okay, we got to start thinking a little bit creatively here, because we want to keep getting deals, we want to keep raising money, and it's not that we're going out into the market looking for deals ourselves now. We have partners that we've been working with for quite a while, and we know, like, and trust them, and they bring deals to us, and we kind of we vetted the partners, and we vet the deals, and we kind of like doing stuff with other people. As everyone says, real estate investing is a team sport, and we love working with great people, and we love win-win situations for everyone. Yeah. So here we were at that point, and lending kind of stopped, and we spoke to a lot of people, and they said, right now we're under contract for certain multifamily properties, and nothing seems to be moving. This is like very early on 2020, And I'd been in touch with someone who was doing industrial, and we'd been talking for a while. And for me, it was like something out of my wheelhouse. I didn't quite understand it. And then I was learning little by little by little. And then I realized that there were certain industries, certain tenants and properties that were actually going crazy. Business was crazy. These were like essential industries. People who were, for instance, supplying food to supermarkets. And, the whole Amazon thing was crazy, distribution centers, warehouses. And we thought, okay, we've got to start looking there. And our partners were looking as well. And the first one we got into was like a cold storage facility that had frozen products selling to Target, Walmart, Whole Foods, and their business was just going out the roof. And we figured, well, that's a good tenant to have. So we started looking for these kind of tenants where their business was booming and there was a property for sale. And so we would basically purchase a property. And then as long as we keep track of the tenant, that their business is booming, and we knew that we had some, I guess, longevity there. We did have a couple of industrial properties previously, more like industrial parks that had like mom and pop people. And some of those were suffering a bit. Yeah, their businesses had shut down. So with those ones, we're just writing those out. But with our new focus on essential industries, we figured.
Nice. No, I appreciate you elaborating on that and just how you all pivoted. And like, since capital raising is your specialty, I want to lean on that some, but on what you just said as well around, making that shift in asset classes like that. How was that presented to investors, and what was the take like? Was there a big pushback, or how was that? How did you all warm them up to that idea?
Yeah, that's a great question. It was a tough one. A lot of people, we'd send out a little first look at a potential deal, and we got responses like, "Yeah, I'm not comfortable. I like multifamily, or not really comfortable in doing something like that." And then we had other people who were like, "Okay, well, tell us more. Can you explain?" So we once people heard what triple net was, they loved that. So triple net, okay, you mean that the owner of the property is not responsible for property taxes, insurance, maintenance, repairs, anything like that. So it's like, okay, so what then does the owner have to look after? Well, debt service. And once people heard that, they realized that, great, there are all these like safeguards in there that, and they were seeing what was happening with multifamily at the time. And they said, okay, well, this sounds really interesting. Tell us more.
Do you find that they want to get in, say, just a little bit and then grow, over time? I mean, did they test the waters, or was it like, no, I mean, you all have educated me and I'm willing to jump right in?
Yeah. So I think most people wanted to jump in at like the minimum. And there were some people, it's like, hey, whatever, you've been good with us so far, we'll just throw it in. But I think more people were cautious.
Sure.
They wanted to test the waters first. Yeah. But I think that's the same with any
of course,
capital raiser or syndicator, sponsor. It's like, it's that whole learning period. And then a lot of people will tell you, oh, I've only got this much. But somewhere along the line, someone will let out that no, they're probably sitting on millions and millions, but they're just testing you.
Yeah, no doubt about it. I've seen that happen personally many times, and heard about that with many other people. So your capital raising, I want to dive into that a little bit. I mean, this is your all specialty. Maybe there's we can start with some tools, things that you all have learned that work best for you all, and then maybe we can jump into some best practices as well.
Mm-hmm. Okay.
What would be some tools that you would say, you know what, you're doing this, you got to have these things, or some things that you all have learned that work the best?
Well, we make sure that we have a personal relationship with investors. Even if some of our raises are for accredited only, 506C, some of them are for everyone. but we make sure we have some kind of relationship. And for us, it's like, you know what, we don't really care if you get into this one relationship. We'll always find another investor, but we want you to feel comfortable, and we want you to feel comfortable so you can be a repeat investor. So for us, it's all about making the investor feel really comfortable. And we also, this is a really interesting thing. We like to do this with investors. We like to understand their personality so we can speak to them. We use a system called bank code, BANK. And you go to, there's a website, I think bankcode.com. And what happens is someone does like a really quick personality test, and we can then tell whether they are what's called a B blueprint, kind of like the accountant numbers type. They just want to crunch numbers. Action, whether the action person is someone who's like, we don't care about the details, just get to the point. Just give us the bottom line. Then there's N, that's nurturer. And a nurturer is somebody who they love doing stuff in community with people where everyone wins. So they're more about having a relationship with you. They want to see that the property is doing things for its tenants in the community. And then there's K, the last letter, which is knowledge. They're the people who want to deep dive into research. So when someone tells us that they are like their first letter that comes up is knowledge, it's like, okay, so here's the offering memorandum. Here's the all the information on the market. Here is the basically here are the rent rolls. You can go through everything. You can spend your time, and they're very happy to go away and spend hours and hours and hours just getting that knowledge. And then when they feel comfortable, if they do, they'll come back to you and say, we want to invest. The action people is like, you know, we know that if we sent all of that stuff over, they'd be like, okay, this is just too confusing to me. I'm moving on to something else. So we kind of get an understanding of the investor's personality code when it comes to how they operate and money and all that. And then we act accordingly.
I think it's so interesting. I don't think I've ever heard anyone talk about having investors complete a personality test. I think that's so neat because what you just said, right? I mean, you can understand a little more about how they think and you can adjust accordingly. Because exactly what you just said, some people, I mean, you're talking to an engineer, you know right away, they want to see the numbers, they want to see the details. They're going to be, I mean, I've got some that'll stay up till 2 a.m, like analyzing every number, right? You know, a few of those. And then there's some, if you sent that to them, like you said, well, it would almost scare them to death, right? I mean, they're just like, no, you know, I trust you all. I don't, you know, and I want them to see it, but you know, some of them are just like, that's just too much information, right? All at once, right? And so go ahead.
I've lost investors on calls where I've just gone into details, and they're like, you know, you could probably see them looking at their watch going, you know, this isn't for me. This is like, I'm not feeling this. And they just want to get off the call and go.
Tell me a little bit about administering that personality test. Like, how does that come into a workflow? How do you get investors to complete something like that? What's the time commitment for them?
Oh, it's really quick. 2 things. Number one, I can usually pick in the first couple of minutes what someone is. Like, I'll know what their number 1 code is. Like, I know that, for instance, they tell me, okay, I'm an accountant and I got a degree in statistics and I love my work. So it's kind of like they're telling you what they love, what they want. And then their second thing might be like, well, I'm in, you know, I invest with my wife and my wife kind of likes this and that. And so I kind of get a feel. But what we have been doing, and I haven't done it lately, but I want to do it more, is send them the link to go and get their bank code, and you get it in 90 seconds. And then we usually do it through, we have like a little account there. So we get their results, and I'll get their results before I get on the phone with them.
That's neat. No, that's neat. What other tools do you use? Do you find useful, whether, you know, it's something like that or something just administratively, you know, in-house, or anything that would be helpful for somebody that's trying to do the same thing?
So I'll just let you know that Monique and I, we kind of have been approached by a lot of couples who've said, like, you guys work together in real estate investing. How do you do it? Like, we just get together and we tear our hair apart and stuff. So we figured we got to figure out ways to help couples, because when anyone's ever making a financial decision to invest with you and they're with someone, there's usually, they have to get the approval of the partner, otherwise they're in deep doo-doo. So we also have other techniques. There's a couple, Taylor and Megan Kovar. They're called the money couple. They have this thing called 5 personalities, money personalities, and we've started implementing that as well. So we like to see how people operate in terms of their personalities interacting with other people, and this is specifically on money. So there's the first one is someone who loves to spend, and there's someone who loves to save, and there's someone who's into risk, just for risk, and there's someone who wants security, and then there's a person who basically doesn't care about money, just doesn't even come into their thoughts. We're using that as well more and more.
That would be great to know about your spouse, right? Those things right there. Like, what are they? Absolutely.
And it's kind of mind opening when you find out, like, oh, I thought, So it helps you being able to talk to not only your spouse or your partner, and that can be a business partner too. It also helps you when you're talking to investors to find out where they're coming from, what their needs are, and the way they operate. Because ultimately, as a capital raiser, sponsor, we are here to meet the needs of our investors.
No doubt about it. No doubt. Yeah, like you said, that'd be great to know that about investors as well. Any other best practices that you would share with somebody that's getting started in this industry, maybe even been doing it for a while, that, you know what, we've been doing this, or we do this every month for our investors, or every quarter, or whatever, that they've just loved, and wanted to come back to invest more because of this thing?
Well, for us, the number one thing has always been communication. We try to send out newsletters for every investment every month. And most of our investments, actually, we're given distributions monthly. So it kind of comes out together. The issue has been where we're working with partners, and the partners on the same level of communication as us. So we're having to say, we need the numbers, we need what's going on. You're on the ground, you're dealing with property managers or tenants or whatever. We need this information to give our investors. So we find sometimes that we're like the meat in the sandwich, and we're just like trying to get information to pass it on, and when we're just not getting it. But yeah, communication for us is key. It's number one. Giving the good, the bad, and the ugly. It's tough when you have to say that this investment right now is not going well. It's really, really tough. But you kind of swallow and go like, okay, this didn't go well this quarter or this month. We're working on this, and this, but right now this isn't going well. And investors appreciate it. Some are kind of like going to be like, they may start freaking out. That's the way they deal with things. And others are like, in fact, the majority are like, we appreciate your honesty, your communication, and that's fine. I think that all boils down to when you first vet an investor, if you do it correctly, you will not have those issues moving forward. And sometimes, especially for a beginning syndicator, they need to get investors. They need people in the deal. So they'll take anyone's money. And sometimes money is very costly.
Yeah.
Having to deal with certain investors. There are some that are just the squeaky wheel. They're going to be on your case all the time, sending you emails day and night. I need more information. What's going on there? I didn't hear from you yesterday. You're a day late. So kind of like, and you hear that if I can go back to investors who've been with us for quite a while. And I remember the first time I met them, I talk to them, and I recognize now that maybe at that time, that investor may have put all of their money in your investment, and they're scared, they're nervous. Totally understand it. What I would do in future is, as well as telling investors about the potential risk, I'll also ask them, would you be comfortable if you didn't get your money back? Now, most people are going to say, well, no, of course, I'm in this to get returns and everything. But you kind of get an understanding if you can find that someone, they're putting in like less than 10% of their
net worth
net worth. Yeah. Or, and if someone is putting in like everything, it's probably better just to say no.
Yeah. That's probably hard for some to hear, especially when you're getting started. And you said it, in the very beginning. I mean, you're wanting to accept every investor you can possibly find, right? But it is a mistake. I agree completely. To take just anyone. I mean, and you want to help those people, but you do not want to take their last dollars that they have, in your investment, or all of their investing dollars. No doubt about it. Well, we have just another minute or two. Any other mistakes that you see other people make, or you all make, that you could say, hey, don't do this?
Yeah, something that was drummed into me very early on, and that was we started going to the real estate guys events back in 2016. Robert Helms and Russell Gray. And one of the things we learned was, when you are talking about a deal, talking about numbers, they're projections. Anyone can write anything on a piece of paper and make something look good. So it's really important to let investors know that these are projections. It's a pro forma. But I get a lot of like investment opportunities in my inbox. And I see so many people talking about their deals, and they're saying, this is the return you're going to get. And this is what the deal's going to do. And it's like, they don't use the word projections, our best estimates, we expect, we're conservatively projecting this. So they leave off those keywords. And, I was told by an attorney that, you can't do that. You have to cover yourself there, because any numbers you put are projections for the future. So I see people basically put in stone what they're going to give investors, and shouldn't be doing that.
I think it's very wise words. It's very wise words. I also hear that all the time. And it is, say, this is what you're going to get. I mean, you said that. I thought, I hear that all the time. This is what you're going to get. And it is projections. Yeah. I just think it's good to remember the expectation you're setting for your investors. You have every intention of paying those projections. However, they are projections, right? You hope you can pay more than that, but they are projections. Things happen. These are massive deals, and there's lots of interworking pieces, things that you just cannot project at sometimes, right? But that is your goal, and you've taken all those precautions. But on that same note, when you're looking at these projects, Peter, how do you prepare for a downturn? How do you know that you're prepared for a downturn when you're working on these projects?
Well, it's all about underwriting conservatively, and we make sure there are a lot of safeguards in place. With the industrial, I think the number one thing is making sure that you're purchasing the property at a good price, so that you're not really counting on, well, you're hoping there's appreciation because cap rates are compressing, and vacancies in that particular market are shrinking, but you want to buy at the right price. You want the tenant to be really, really strong. With industrial, you're signing typically a 20-year lease, and you're putting some options on that, maybe another couple of 10-year options. Although you're only most likely going to be keeping it for 5 years or so. So you've figured out your exit points, very conservative on everything. The other thing is, if something happens where you do lose a tenant, you want to make sure that you can rent it out, and make sure that you have any downtime is covered. So typically we like to make sure that the deal works by giving the tenant lower than market rent. So if the deal works with the rent being lower than market, then we know that we've got some kind of buffer if we have to ever get another tenant in, and that's never ever happened. And with our partners too, it's never happened in like 10, 15 years. So if it ever happens, then we know we can get market rents. It's entering a deal the right way, not trying to force. Well, yeah, you can always force value, but it's if you can enter whatever you do up front is probably more important than what you're doing along the way.
No doubt about it. It's how you buy it, right? No doubt. And yeah, I think you're like making sure you can lower those rents, right? If something happens, we want to make sure that, hey, we can still be competitive if we have to come down in a big way. So on the capital raising front too, what's been your best source for meeting new investors?
The best source for new investors, events. Monique, my wife, has her network, which is the Real Estate Investor Goddesses. So she's focusing on women. I'm actually the chief operating officer of that business. I'm like the guy behind the scenes. But we have a lot of women who are interested in becoming real estate investors and learning. So we have educational programs to teach women about different asset classes, how to syndicate, all that kind of stuff. And then once they get educated, they want to invest. So we have our investment vehicle. So we have a flow of potential investors coming in. So there's that. And then just events, going to different events. And these days, Zoom events, webinars.
Yeah. So you would say like the thought leadership platform that Monique has, and then that community that you all built, and really then through education, right? Educating them is how you're gaining many investors.
Exactly. Yeah.
Yeah. I just think that's great for the listener to think about that. Like, how are you putting yourself out there? How are you really being uncomfortable, right? Putting yourself out there in some kind of thought leadership platform. And so you can be educating people, because typically often we can't put deals out, but hey, you can put educational content out, right? And add value to people at the same time. Yeah. Peter, what would be the number one thing that's contributed to your success?
The number one thing, I'd have to say my wife, being in partnership with her, we have an incredible relationship. We've been investing in real estate for 15 years or more. We started syndication 6 years ago. But I think it's her, we've learned to become each other's cheerleaders, and we've learned that we can't do everything. I can't do everything. She can't do everything. And we've built up teams to do things. But initially it was just the two of us. So I let her run with what she's excellent at, and then she lets me run with what's excellent at. And we just have this synergy, where 1 + 1 = 11. So
love that.
That's probably what's done it. Yeah. The relationship.
Yeah. If that's me and my wife and it's 11, she's like 10 of those 11, right? So completely understand there. How do you like to give back?
Oh, geez. Education. We love to give back. We actually have set up a foundation. We're kind of in the early stages of that. It's through the women's thing. It's called the Real Estate Investor Goddess Foundation. So we've tagged a number of causes that we're going to be given to. We haven't actually started there, but pretty much it's education, helping out anyone who is looking to get some kind of financial freedom, anyone who is trying to figure out how to get out of a place they're in that they're not happy in. And we're happy, like we're doing it with couples now. We have an organization now called Real Estate Investors Soulmates. And we actually just had a retreat last weekend where we had a whole lot of couples. We're just helping them figure out where they were. And pretty much That's what we do.
Awesome. No, I appreciate you sharing that, and you all just being focused on giving back and getting your foundation going. Peter, appreciate you just talking about COVID and how, it helped you all, made you all pivot or think about pivoting and just going from multifamily to industrial, what C-class, was happening, tenants stopping to pay rent and that pushed you all into industrial, and then how you all present that to investors and this capital raising, how that's your specialty, but there's some tools you all have implemented and best practices and even some mistakes that were, I think, very crucial. I love the advice around how you say what you're going to do as far as projections versus, what you're going to pay, not saying, hey, we're going to pay this. And so I just think that's very good words of wisdom there. But tell the listeners how they can get in touch with you and learn more about you.
Yeah, you can jump to our website, VIP-assets, ASSETS, VIPassets.com, or you can jump on to Facebook. There's a Facebook page for Real Estate Investor Soulmates.
Thank you for listening to the Real Estate Syndication Show, brought to you by LifeBridge Capital. LifeBridge Capital works with investors nationwide to invest in real estate, while also donating 50% of its profits to assist parents who are committing to adoption. LifeBridge Capital, making a difference, one investor and one child at a time. Connect online at www.lifebridgecapital.com for free material and videos to further your success.